Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that's like a corporate treasure hunt. We will uncover deals, executive changes, and even a crypto play that could either be genius or a total gamble. You might want to hold on to your hats for this one. Before we jump in, if you like getting simple explanations from complicated company documents, make sure to subscribe. Also, we have a Discord community. The link is in the description below. Come join. We're looking at an 8K filing from Synaptogenix, a company in the biotech field. These reports are used to tell investors about big, important events that could affect the company. The date on this filing is June 4, 2025, but many events took place after that date and are disclosed in the filing. Scroll item 1.01 entry into a core material definitive agreement scroll. Because the main event, a big investment deal. Synaptogenix is selling shares of a new type of preferred stock and warrants, which are like coupons to buy more stock later to some accredited investors, meaning people who meet certain income or wealth requirements. This is called a private placement. They're hoping to raise $5.5 million, $5.5 million. Scroll. The aggregate gross proceeds from the private placement, the company expects to get $5.5 million before expenses from this deal. So what are they going to do with all that cash? Scroll general corporate purposes and working capital suit. Well, for general business needs, but here's where it gets interesting. They are also planning to buy Bitanza Tower as a treasury reserve asset. Scroll acquisition of Bitanza Tower to act as a treasury reserve asset scroll. Bitanza Tower is a cryptocurrency focused on artificial intelligence. So Synaptogenix, a biotech company, is betting on crypto. This sounds risky, but the company focused on artificial intelligence. To help make this happen, they're using a placement agent, which is like a middleman. They are using GP Nomenclature Inc. and they have to pay them. Scroll a cash fee equal to 7.0% of Accal's, the gross proceeds. Scroll the company will pay the placement agent a cash fee equal to 7% of the money they get. That's more than $350,000. Plus, they also get warrants to buy 3% of the common stock that the preferred stock can be turned into. This is how the middleman gets paid. Scroll the terms to cover so the preferred stock scroll. Let's talk about this preferred stock. Basically, it's a special type of stock that has some advantages over regular common stock. The preferred stock can be converted or changed into common stock at a price of $3.00 per share. This price can change based on certain events, like the company issuing more shares at a lower price. Scroll equal quarterly installments, commencing on September 30, 2025 scroll. TIG, the company has to start paying back the money from the preferred stock in quarterly installments, starting in September of 2025. This is like a loan that has to be repaid. Scroll dividends of 5% per annum, porter compounded, quarterly scroll. The holders of the preferred stock will get paid 5% per year and it gets compounded, meaning they will get paid interest on the interest. If certain bad things happen called triggering events, the dividend goes up to 15%. Scroll triggering event, as defined quest in the certificate of designations. Scroll triggering events can cause serious problems. If the company fails to maintain registration or fails to pay the preferred stockholders, then this 5% rate will jump to 15%. This is a big deal. There's a limit on how many shares can be issued upon converting the preferred stock and warrants. This is in place until the company's stockholders approve issuing more than 19.99% of the company's outstanding shares. They have to have a meeting to vote on this by September 1, 2025. Scroll amendment, Quanta Series C, preferred certificate of designation scroll. They also made some changes to the terms of a previous preferred stock offering called Series C. These changes mostly have to do with how the value of those shares is calculated in certain situations, especially if the company is bought out. Scroll Series K or C warrant amendment scroll. They also made some changes to the Series C preferred warrant. This has to do with the math of calculating stock volatility. Scroll James Kalaticha and Z-List Media, Inc. Scroll Cafety. Now, for something completely different, the company has hired James Altucher and Z-List Media as consultants. The consultant will help the company with managing its crypto portfolio. The agreement is for 1 year. Scroll first tranche call Scroll. They are paying the consultant with warrants. They can buy 400,000 shares with these warrants. They can buy 400,000 shares at 200,000 shares at 200,000 shares at $12,000 shares at 400,000 shares at $12. Scroll item to departure of directors or certain officers scroll. There have been some changes in leadership. Dr. Daniel Alcon resigned as an officer, director, and chief science officer, but will continue to work with the company as a consultant. He will now work on the Bryostatin Development Committee. His base monthly salary is being reduced to $12,500 per month. Scroll resignation of Dr. Alan J. Cruz-Tuckman. MDen scroll XD Dr. Alan Tuckman resigned as CEO and director, but will remain as chief medical officer. His monthly salary is also being reduced to $7,500 per month of Joshua Silverman, Quaffis executive chairman of the board. Scroll monthly salary of $30,000 per month. Scroll Kivens. He will be paid a monthly salary of $30,000 per month. Now, let's zoom out for a second. This company is making some big moves. They're betting big on crypto, specifically AI-related crypto. They're restructuring their leadership, and they are bringing in consultants to help them navigate this new world. One of the biggest strengths of the company is their focus on artificial intelligence and their willingness to embrace new technologies like crypto. But the biggest risk is that the company is betting on the volatile crypto market. If the crypto market crashes, the company could lose a lot of money. Also, the company is relying on new leadership and consultants. If these people don't perform, the company could suffer. In conclusion, Synaptogenix is a company that is trying to transform itself. They're taking big risks, but they could also reap big rewards. This could pay off, or it could blow up in their faces. What do you think? Alright, that's our breakdown of Synaptogenix's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.